internal control deficiencies. And as we all know, in the exam, the commonly tested type of question would be that, you'll be given a particular scenario. You'll have to identify the control deficiencies, right? Recommend controls, also provide some test of controls as well, right? So these kinds of questions are very common in the exam. So be prepared for it, right? So for the significant deficiencies, what we do is we communicate it in formal writing to those charged with governance through a management letter. Hey everyone, welcome to another session. This is Vishnu Vijay, a proud FinTrammer who's been teaching students across the globe and across the designations. And I will be covering the syllabus part C of your audit and assurance paper, which is primarily in relation to internal control, isn't it? So, as you can see, we'll be covering the internal control system and related aspects. Then we will look at the as in how to document an internal control system. And then we will talk about ID controls and then internal audit as well. Okay, folks, so let's get started quickly, shall we? So as you can see here, we have the benefits of internal control systems. But before getting into that, what is an internal control system exactly? It's basically the precautionary controls that are there in an organization to prevent, detect, and correct certain misstatements caused due to fraud and error activities. Okay, folks, so that's basically the idea. So it has various benefits. First of all, it prevents and detects fraud and error, as I mentioned, and it lowers control risk and reduces ROMM. Okay, folks, what does that mean? ROMM is the combination of inherent risk as well as control risk, right? So if control risk reduces, then ROMM also reduces. But what is a control risk exactly? Control risk is the risk that the financial statements might be misstated due to internal controls not operating effectively. Okay, folks, so that's basically the idea. So that particular risk will be reduced by having good, sophisticated internal control systems in our organization. Okay, folks, and well, safeguard of the company's asset. It prevents fraudulent activities like misappropriation of assets and stuff like that. And then it is an indicator of good corporate governance as well. And of course, it enables good financial reporting as well because there won't be any misstatements as such, right? So that's basically why we implement internal control systems. Now, moving on to the components of internal control system. There are 5 components. There is, of course, the control environment, right? And control environment is all about, the overall environment of that particular business. Is everyone having an ethical, honest, and an honest mindset, right? Is there any top level commitment in implementing these internal controls and in maintaining these internal controls properly as well, right? So all these aspects are what comes under control environment. Secondly, we have risk assessment processes as well, right? Which is basically the processes which we just discussed in the previous syllabus area. And then we have information system as well, right? Right. So when it comes to information systems, right, it is basically basically the hardwares and softwares that are there to meet the business's data requirements. Okay, folks. So do we have appropriate amounts of information systems within our organization to ensure that the internal controls are operating effectively? All those things, right? And then certain control activities should be there in place to prevent, detect, and correct misstatements. And then finally, there is monitoring of control as well, because it's not just about implementing internal controls and leaving them be, right? We have to monitor them on a regular basis to ensure that they're operating effectively as well. So that's what monitoring of control is all about. So these are the components of an internal control systems. And then we move on to the next part, which is documenting internal control systems. So guys, as an auditor, what is my job here? Guys, as an auditor, like my focus is on the financial statements, right? So should I have a look at the internal control systems? The answer is no. We don't have any obligation to review the internal control systems of an organization as per the law. However, you know, there is still a risk though, right? There is still a control risk, right? There is a chance that if the internal controls are not operating effectively, then it's going to eventually end up as a misstatement in the financial statements, right? Which is why we review the internal controls. Okay, folks, so there's no mandatory requirement that we should, unless, of course, we're following the Sarbanes-Oxley Act. Okay, folks, that's followed in the US, not the UK. So we're fine, right? So, so yeah, we look into those controls that are related to my financial statements items. Okay, folks, so that's basically the idea. Now, when we talk about that, okay, folks, the first thing that we do is something known as walkthroughs. Okay, folks, we conduct walkthroughs to understand certain processes. So let's say that I'm auditing the revenue figure in the financial statement, from the income statement, right? So the revenue figure, how is that generated? I understand that process. Okay, folks. So this is a related process known as order to cash, right? So we receive sales order, we dispatch a good, and then we raise invoice, and ultimately we get the cash receipt, right? This is how we recognize revenue, right? So I understand that particular process. and then I document that particular process, and then I document the controls that are in relation to that process as well. Okay, folks. So there are various methods in which we can document internal controls. First of all, there is flowchart, which is like the go-to method nowadays, right? We prepare a flowchart of the entire process and point out where are all the controls coming in as well. Simple as that. Okay, folks, that's what flowcharts are. Secondly, we have the organization chart, which is basically all the who reports to whom, those kinds of charts, right? And then questionnaires. There are two types of questionnaires which we do: internal control questionnaires as well as internal control evaluation questionnaires as well. Internal control questionnaires are those questionnaires which have a yes or no question to it. Okay, folks, there will be a list of control, and we're just asking the management that, hey, do you have this control or not? Yes or no. That's just it. Okay, folks. Whereas internal control evaluation questionnaire is where we ask them that, hey, I can identify this, and this risks and control objectives from that particular process. So, do what all controls do you guys have in relation to or in order to mitigate this particular risk? Okay, folks, that's what an evaluation questionnaire is all about. It's not a simple yes or no question, right? I'm asking the management to explain what all controls they have to mitigate a certain control risk. Okay, folks, so that's basically the idea. Now, ultimately, we have the narrative notes as well, which is another common method. Okay, folks. So, certain companies prepare these narratives explaining, it's like an in detailed explanation of the entire process and the related controls to it. Okay, folks. So, these are the several methods through which we can document internal control systems. And I'm pretty sure that if you have done past papers, you will understand that this is also commonly tested topics with all the advantages and disadvantages of each, of these documentation process mentioned as well, right? So, be, very ready with this particular topic as well. Okay, folks. Like if I look at the advantages and disadvantages, I know that narrative notes are very descriptive, so it is easy and simple to prepare. However, it's quite difficult to identify what are the missing controls from the narratives, right? And if I look into flow charts, like again, it's pretty easy to prepare, right? But the problem with flow charts is that you know there might be, like, I may still need narrative notes for an in detailed explanation, right? So these kinds of things, right? These kinds of things need to be remembered as well for the exam. Now, moving on to the next part, we have internal control deficiencies. And as we all know, in the exam, there will be these, the commonly tested type of question would be that, you'll be given a particular scenario, you'll have to identify the control deficiencies, right? Recommend test of controls as well as do some test of, recommend controls, and then recommend also provide some test of controls as well, right? So these kinds of questions are very common in the exam, so be prepared for it, right? And it's not just this, okay, folks. The examiner can, twist the requirements slightly as well. Sometimes instead of detecting, deficient controls, they may require to detect strong controls or key controls or direct controls as well. Okay, folks. So all of these three terms is the same thing itself, but again, people can be confused when they hear when they see something different, right? So that's basically the idea. Okay, folks. So don't panic. Read it carefully. Understand what the examiner wants, and then write your answer. Okay, folks. So simple as that. Now, moving on. So, why do we, what are the control deficiencies exactly? Anything that causes that particular control to not operate effectively. That's basically the idea, right? So, the weaknesses in the controls are identified, and as an auditor, I'll be performing some testive controls to verify this particular aspect as well, right? So, what are the testive controls that you can commonly recommend? Let's say that if nothing comes to your mind in the exam, okay, folks, think of this. Think of wire co, right? Think of wire co, and some answer will come to your mind. Okay, folks. So what is wire co? We can maybe perform walkthrough tests, right, to ensure that the process is being conducted properly, right? We can inspect certain documentation for, let's say, sign offs and authorization, right? And then we can maybe reperform some procedure that the control performer is also doing, right? So that's basically something that I can do. I can inquire with the management for certain details. I can conduct computer-aided audit techniques like test data, etc. Right, and then I can also observe processes like, let's say, inventory counts and stuff like that. Right, so that's basically the idea. Okay, folks. So if you think from this particular angle, these are all just action verbs that are there, right? So if you think from this angle, some test of control will come to your mind. Okay, folks. So yeah, that's basically the idea. So that's just a quick trick regarding the test of controls. And what else? Limitations of internal control system. What are the limitations? Well, there can be human error, right? Humans are involved. So, if it's a manual control or something like that, then obviously there's a limitation of human error, and it happens, right? So and what else? There might be, see, if there are controls, if I am, let's say, investing a certain amount of money in my business to implement internal controls and it's not operating effectively, then it's a waste of money, right? So that's basically the idea. Collusions between employees can happen, fraudulent activities and stuff like that, right? Teaming and laddering, etc., right? People with power could abuse their power, right? There's a concept known as management overriding the controls as well, right? So that can happen. Use of management's judgment on nature and extent of controls, right? Certain controls are quite judgmental as well to a certain extent, right? And finally, cost over benefits, right? Ideally, if I am, implementing internal controls, then the benefits of implementing that should exceed my cost, right? But if the other way around, then it's not that profitable, right? So that's basically the idea. Okay, folks. So that's some limitations of internal control systems as well. Now, moving on to another concept, we have IT controls as well, right? This picture has nothing to do with the data here, but yeah, in any which ways. Maybe I should have inputted some computers or something, but yeah, I love mountains, so yeah, never mind. Cool. Any which way, so two types of control, right? Application control as well as general control. What's the idea here? Application control protects the accuracy and integrity of the data. Okay, folks. Whereas general control protects the factors surrounding the data. That's basically the primary difference if you look at it from a holistic viewpoint, right? So let's have a look at some examples, right? So if you look at application controls, we have batch total checks, right? Just to see if the numbers are accurate, right? And then a sequence check to see if there's any missing information, right? We have arithmetic checks as well. Again, recalculation of numbers to see if they're accurate. Existence checks. If let's say that I am recording certain inventory or any assets in my non-current asset register or something like that, then does it actually exist? Is something that I'm verifying. Exception reporting, as in if there is any anomalies or unusual items, then pointing that out, that particular report, and authorization of transaction entries as well. Okay, folks. So all of these are certain controls that we have to protect the data integrity or to protect the accuracy of the data, right? Right. Whereas if you look at general controls on the other hand, right? What is general control doing? Data center and network operations, systems or software acquisitions, uh, program change and maintenance, access security, disaster recovery, right? So these are just there to protect the data overall. Okay, folks, from another unauthorized person from accessing it, or another unauthorized person from stealing the data as well. Okay, folks, so that's basically how general controls are different from application controls. Okay, folks, so just keep this particular point in mind as well. Now, is there any point that I need to further explain? I don't think so. It's all pretty straightforward. We can have, I'll explain the first point, maybe data center and network operations. These are basically like things like having servers and, having CCTV cameras, or, having smart door locks for the server rooms and stuff like that, right? So those kinds of things, right? So if whenever I'm acquiring a new software, I can't just simply purchase it and install it on my system. I have to, run a trial or something to ensure that the software is operating effectively, right? That's basically something that I do. And program change and maintenance is about, who all is making changes to, let's say, the standing data or something like that within my softwares and systems, right? So all those all those monitoring. And then access security is again smart door locks, CCTV cameras, security, hiring a security guard, all those things. Disaster recovery is the idea that, if let's say that there's some factor that is damaging my particular data, or if let's say that there was a power outage which resulted in a data loss or something like that, the data needs to be, at least a backup data needs to be stored somewhere. Okay, folks. So that's basically the idea. All right. So that's basically some examples of general controls as well. Now, moving on to the next aspect, we have internal control reporting as well. So, how do we report these internal control deficiencies and stuff like that to the management? There's a formal letter known as the management letter. Okay, folks, and I guess the manager will have this kind of expression when they see the letter, because there's a lot of deficiencies and stuff like that communicated within that particular letter as well. So, when it comes to the management letter, what all things are there? We document the internal control weaknesses, we emphasize on the weaknesses identified during the course of the audit, right? There's exclusive management with no third party. Yeah, okay, of course. So when it comes to this particular management letter, this is not something that we publish to the public. Okay, folks, it's just for internal use of the management. Okay, folks, why is that? Because as an auditor, as I mentioned earlier, I'm not going to be looking into all the internal controls in the organization, right? I'm only looking into those controls which are related to my financial statements items, right? So that's basically the reason why it's only for internal use and we're not publishing anything. Okay, folks. So that creates unrealistic expectations for the public. So we don't do that. Okay, folks. So that's basically the idea. So they're not supposed to disclose this particular management letter without the auditor's consent. So keep that in mind. Okay. Now, moving on to the next one, we have ISA 265, communicating deficiencies in internal control to those charged with governance, right? So, again, like if see, there are two types of deficiencies. There are significant deficiencies, and then there are not that significant deficiencies as well, right? So, for the significant deficiencies, what we do is we communicate it in formal writing to those charged with governance through a management letter, right? Whereas for the other deficiencies, like we don't have any responsibility in communicating those, but ethically, since it's the right thing to do, we orally communicate it to the management. Okay, folks. So that's basically the idea. And what are the factors that determines as to whether a particular deficiency is significant or not? Basically, the go-to method is to look into the financial impact. Okay, folks, what is the financial impact that a particular deficiency can create? If it is too significant or material, then it's a significant deficiency. That's just it. Okay, folks. But yeah, there are other materials as well. Potential for material misstatement. That's the go-to method. Susceptibility to fraud, loss or fraud, and then complexity of determining the estimated amounts exposed to deficiencies, volume of activity in the accounts, importance of controls to financial reporting, cause and frequency of control exceptions, and interaction with other deficiencies as well. So after looking into each and every one of these factors, if there's a high amount of risk, then it most probably would be a significant deficiency itself. Okay, folks, so that's basically the idea. Now, moving on to the final topic, which is internal audit, right? So when it comes to internal audit, like who are they and how are they different from external auditors? External auditors are independent auditors which are external to the client, right? External to the company, right? But when it comes to internal auditors, these are in-house employees or they can be outsourced, right? And the scope of work is totally different from the external auditors. Okay, folks. So when it comes to internal auditors, the scope of work include providing consulting activities as well. It's not just reviewing the financial statement, but it's also about conducting reviews on internal controls. They provide consulting services. They ensure that the company is complying with governance and other laws and regulations, etc. Okay, folks. So it's a broader scope of work. So that's basically the idea. And again, there's no mandatory requirement to have an internal control system, but as per the UK Corporate Governance Code, the need for internal audit, let's say that if you don't have an internal audit team within your client, right, within your company, then the need for an internal auditor needs to be considered on an annual basis. Okay, folks, just consider it, right, as to whether it is needed or not. That's basically it. Now, moving on to internal audit assignments, what all things do they do? Of course, they conduct value for money audits, right? Most definitely, right? Value for money is basically the three E's, right? Economy, efficiency, and effectiveness, right? That's something that they do, especially for non-for-profit organizations and stuff like that, right? And then IT audits would be conducted, definitely, right? So when it comes to IT audits, we primarily look at two things, right? First of all, is there any change to the features or overall updations or something like that that has happened to the software that needs to be verified, right? And then secondly, we have a look into user access as well. Who all has accessed that particular software as well, or access that particular software itself. Okay, folks. So that's basically the idea. That's what we do in IT audits. There's no need for the auditor to learn Python or something like that to, review everything, right? We just need to have the basic knowledge. We just need to see if the software is doing what it's intended to do. Okay, folks. So if it, let's say, an accounting software, then is it generating the right reports? Is it generating reports with accurate data? This is what we are verifying. That's just it. Okay. Now, moving on to financial audit. Again, we're just ensuring that the financial information is provided to the right people timely, and what is the level of financial risk, is that being managed properly, right? And all those aspects. Regulatory compliance is all about like complying with the laws and regulations of the of that particular client, right? So that's basically the idea. Fraud investigations will be conducted if an instance arises. Customer experience audit is when they go as mystery shoppers and then identify if there's any issues faced by customers while getting services or goods from that particular company, right? And for ultimately there is operational audits as well, which looks for inefficiencies and non-value adding activities, etc. Okay, folks. So that's basically the idea. So these are some audit assignments taken up by the internal auditors. And ultimately, as I mentioned earlier, internal audit team can be outsourced as well, right? So we call them, let's say that if it is outsourced, then we call that particular third party organization as a service organization. Okay, folks. So if any function of a particular company is outsourced to another, right? So that outsourced company is known as a service organization. So remember that. Now, um, if let's say that we are outsourcing the internal audit team members, right? So what are the advantages? There would be more specialized staff with appropriate qualifications. See, there's no mandatory need that an internal auditor should have a qualification. If they have it, then it's great, but there's no mandatory requirement as such. Okay, folks. So you know, but if it's, let's say that they're outsourcing, then they would obviously be outsourcing to qualified people itself. Okay. Secondly, avoidance of recruitment and training costs. Of course, I don't have to spend money hiring people, training them, etc. Right? Immediate establishment of internal audit department can happen, right? And then employment can be on a flexible basis as well. Like whenever the work comes up, then we can hire them, and if there is no work, then we don't have to, right? We don't have to unnecessarily pay salary for the in-house staff if that's the case, right? So that's basically the idea. Improved independence as well, right? Since they're external to the firm, their independence has increased as well. And then management time savings as well, right? Management time is also saved since they don't have to continuously monitor an in-house team, right? That's basically the idea. So these are the advantages. What about the disadvantages? Ethical threats. If the firm conducts the internal and external audit, most definitely, right? There would be self-review and at times familiarity threat as well, right? And then opposition due to staff redundancies. If I, let's say, already have an in-house internal audit team and I'm planning to outsource it now, then the existing staff needs to be, laid off, right? So that's basically that could, lead to another set of costs as well. What else? External staff may lack firm-specific understanding as well, right? Because they work in an entirely different organization, right? So they may not have the organization, know about the organization culture, what they do, what our objective is, right? So all those things. And then high outsourcing costs might deter having an internal audit function. If it's, let's say, expensive to outsource, then they rather not, right? That's basically the idea. And of course, loss of in-house skill. So it's like having, I would say, it's like either owning a house or renting it out, right? So that's basically the idea. That's basically the same situation. If I have a house of my own, then hey, it's my house, right? But if I'm just renting out the space, then I am getting my basic needs satisfied. But again, do I own it? No, not really, right? So that's basically the idea. Okay, folks. So if I have in-house skills in my own firm, it has its own advantage, right? So that's basically the idea. Okay, folks, that's basically the disadvantage of outsourcing. And finally, we have minimizing and managing risk of outsourcing as well. So, like, since we have these sort of disadvantages, how can we minimize it? Setting and monitoring performance measures. See, the problem is that we're losing out on the control of the work if we are outsourcing, right? So let's just have some sophisticated quality standards and criteria mentioned in our contracts before outsourcing. Okay, folks, that's basically the idea. Quality reviews and work paper reviews can be conducted to ensure that the internal audit team is doing an adequate amount of work, right? Clear agreements on scope, responsibilities, and reporting should be there. And then separation of internal and external audit functions can be there to avoid any ethical threats as well. Okay, folks, these are some ways in which we can minimize the risk of outsourcing as well. So yeah, that's basically all about this particular syllabus area as well. I hope you enjoyed it, and I'll see you later in another session where we will learn something new. Okay, folks. So till then, this is Vishnu Vijay signing off.